Hey everyone, welcome back to the Mark Loeffler Experience. Who is right? There are experts and very, very smart people on both sides of the aisle here. Are we going to have inflation? Are we going to have deflation? Well, what would cause either of them? What would cause both of them? What should we as investors be expecting? Obviously, inflation is, if we're holding assets such as homes or apartment buildings or stocks, inflation is great for us. In a deflationary environment, it's not so good because asset prices are falling. People are waiting to see what happens. Like a manufacturing facility, they're not going to go buy new machinery. They're going to put off making their investment until they see that there can be a turnaround. Likewise, employment declines as less people need to work to make fewer goods. Therefore, then you get a recession. Obviously, we understand we're in an inflationary environment right now as we speak. CPI is like 5%, which is a consumer price index. I've told you that probably real inflation is closer to 10 to 15. Real wage growth isn't keeping up with that. So again, we are getting poorer every day. If you follow my buddy Q-Man, Quentin D'Souza, he put out a bunch of stuff about why is now the time to borrow, because you're basically borrowing at less than inflation. So literally, I bought a condo. I got a 1.2%. Actually, it was a little cheaper, but let's call it 1.2% interest rate on it. And inflation's running, even if it's only 4 or 5%, I pay 1%. They give me a lot of money. So every year, that debt should be less and less just because of inflation. This is how this works. And that's why it's good to borrow in an inflationary environment, because again, you're paying less on interest than you are on things are not growing, yet that money is worth over time. I think we understand that we're in an inflationary environment. Obviously, lumber prices have come off now again. We're down 40% on the year. So we are seeing like inflation starting to come down. I don't know if you've tried to buy a car or a truck lately. I was thinking about buying a truck, walk onto the dealership, and they usually have hundreds of them. They got 2 at this point. And they really don't think the chip shortage is going to change before 2023, 2024. They're just not producing enough chips. So again, might be a good idea to buy some chip manufacturers. I don't know, AMD. I like AMD. Just saying, MU is pretty good. As you can see, like foodstuffs is up pretty high. Like beef is only up 12% for the year. Poultry's up 40%. Obviously, raw materials other than iron ore is down 20% for the year. Copper is up 24%. Coal's up 120%. Lithium, which goes into a lot of electronics, is up 100%. Raw materials go up. The cost to manufacture goes up. Right now, they're actually not passing on those costs to us as much as they're eating it. So that's going to eat into corporate profits, which could lead to lower stock prices over time. Anyways, but we're not going to argue. We know that there's inflation right now. Is inflation the risk to the economy? Depends. If you're sitting on a safe load or a mattress load full of cash, then yes, every day your cash is losing value. If you're sitting on, like the governments are, a massive load of debt, then inflation is good, or at least it becomes worth less and less over time. So let's talk about deflation. What is deflation? Well, obviously it's pricing going down, which means asset prices go down, like we talked about at the beginning. What could cause deflation in this environment right now? Obviously, we have pretty good inflation going on right now. We're still getting stimulus checks. I think the last stimulus checks in the US just went out, and that's all done there. And then in Canada, I believe they're this week as well. We haven't heard anything. Obviously, federal election, nobody's promising stimulus checks. So I think that's kind of done here. So that should taper off, in my mind, some of the inflation. So when we talk about like the interest rates and stuff like that, we talk about the Bank of Canada, lowering or raising interest rates. That's called monetary policy. So we have tightening monetary policy going on right now and around the world. So there's a couple different ways they can affect the economy. Number one is they can buy bond and they can put more money into the money supply. And we do know that the M2 money supply in the US is kind of leveling off. Like they had that huge spike in 2020, which was needed, but it's kind of leveling off. It's kind of coming back to normal. We had a little dip. So is this just the dip we see here and then they're going to inject more money in? So if they start tightening interest rates, less people will borrow, money will start to revolve slower, and you could see that M2 money supply start to dip, which would be pretty inflationary or deflationary, sorry. The other way that governments stimulate the economy is they do massive infrastructure projects, or they spend money, right? So government spending, they do a highway, they do whatever, right? New dam, some billion-dollar project. Well, obviously that hires construction workers, that hires engineers, it hires consultants, it hires tons of people, right? And it trickles down to, they're buying their steel from Stelco, they're buying their this from here, right? This all built up into the economy, which stimulates it, because the more jobs there are, they're good paying jobs, people spend money, which then, they go out for dinner, which then obviously there's the cooks, there's the manager, there's the servers, the front door person, whatever it is, right? So how would we see deflation? In my opinion, I think we only get deflation if this could happen, by the way, we get a tightening of like the monetary policy on the Bank of Canada side, and we see less stimulus spending coming through the government, which we're already seeing that stop, because they're going to stop stimulus checks, right? They're going to stop giving people money for sitting at home, or at least as much money. In Canada, it's called CERB, and that's stopping either this month or next month. We already know from the Bank of Canada that they're not going to raise interest rates until second quarter of 2022. And I'm just going to say, who knows what they're going to do? Then they will tell us in advance. Yet I do think if they see that, that after the stimmy checks, or whatever people call them, that the economy starts to slow, I truly think they're going to keep interest rates low and the bond buying program on until we get back to full employment. The employment we were at before all the shutdowns and all this stuff and whatever else is going on in the world, right? Where do I think we'll end up? I don't usually say this, but I think the people at the Bank of Canada are actually decently smart. I think they could actually go private industry and make a heck of a lot more money, but they're not bad. They're not like our buddy Chicken Little Siddell or any one of the politicians. So they're pretty smart. I think they're going to get us through this. At least I hope they do. I would hate to see deflation. I mean, who wins in a deflationary environment? Well, remember that guy who was sitting on the mattress load of cash? They win. Anybody who has cash in a bank account, it gets worth more and more over time. That's why people don't spend it. If we're in an inflationary environment, there's no point in holding cash. Deflationary environment, being in cash is one of the best returns you can probably get. Anyways, guys, comment down below. Definitely like and subscribe. Let me know what you guys think. Are we going inflation, deflation, stagflation? What's going to happen here? Thanks, everyone. Catch you next time.